You can maybe use commercial real estate, but the best way to do it, the ideal platform that Nelson Nash says, is dividend paying whole life insurance from mutual companies. There's two types of life insurance companies. There's stock companies and there's mutual companies. Stock companies represent 95% of all insurance companies. Stock companies are publicly traded. So if you look up Prudential, MetLife, you look up all the major companies, Primerica is a stock company. If you look up many of the major companies, they are stock companies. If you can buy their stock, they're a stock company. If they're completely private, they're what's called a mutual company. Now, life insurance is very unique in the fact that mutual life insurance companies are owned by the policyholders. And it doesn't act like a nonprofit, but all of the profits must be sent out to the policyholder. And so the whole purpose of the insurance company and a mutual company is to take all of our different life insurance policies, we all give our money to an insurance company, and they promise to give our family some money when we die. They take all of our money and they go invest it in very safe bonds and real estate, which you could probably break bonds off into a couple different sectors as well on this list. But they take all of our money and they invest it for us. All life insurance companies, their job is to invest in very safe assets that never lose money, that they don't have to worry about, and buy really big commercial real estate deals and very high yield bonds, not junk bonds, but high bonds, and be able to give the policies, the families, the death benefit that the policies promise. Like a nonprofit, they pay the CEO, they pay the president, they pay the people working there, but all of the dollars that are left over are sent out to the policyholders. And it's based on how much you put into it. Just like if we all went into business together and you put in $1,000 and you put in $1,000 and you put in $1,000, and everyone on this side put in $1,000 into our business, and all of you put in $2,000 into our business, when it comes said and done to dish out profits, you guys will probably get half of what they get. And you'll get double what they get because you guys put in more what?